please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, Asian markets, they are in a bit of a sticky spot early this morning. Remember, we saw a broad-based sell-off on Wall Street for the second consecutive day. And that explains why, in fact, the Asian markets, they're trading with a bit of a cut. So we have the Nikkei that's down close to around 0.2%. We are seeing selling on select sectors. You have the auto majors that are seeing some selling, financials, manufacturing stocks as well. They're trading a tad bit lower. But in terms of the Kospi, well, the last time I checked, some heavyweight tech names, they were trading mildly in the positive. And that's what's held that market claw back into the green. So pretty good news coming in from there. But if you pull up other couple of markets, you should pull up the Straits as well as the Taiwanese index. Both of them have started off on the back foot with a cut of around 0.3% to around 0.5%. What does all this mean for the SGX Nifty? So let's get the SGX Nifty up for you. Well, it's indicating after yesterday's sell-off, today, in fact, we could start off with a cut of around 30 to around 35 points.
Okay, well, let's tell you about the US markets then. Wall Street ended sharply lower, falling for a second day as the first major sell-off of 2018, in fact, intensified. The Dow Jones dropped 362 points, posting its biggest decline, percentage decline since May. The S&P 500 pulled back 1.1%, with healthcare as the worst performing sector. The 10-year Treasury yield climbed further to trade near levels not seen all the way back since 2014 amid fears of higher inflation. CNBC's Hampton Pearson wraps it all for us.
All the major averages were down on Wall Street. Healthcare down nearly 2% on the S&P after that news from Amazon, Berkshire Hathaway, and JP Morgan about a plan to form a healthcare partnership to cut costs for their U.S. employees. Health insurer United Health down 4%. Drug maker Pfizer off more than 3.6%. The top decliners. The energy sector was another major drag on markets as there is more evidence U.S. crude oil output is rising. The S&P energy sector falling almost 2%. Brent crude futures settling down 44 cents, 69.02 a barrel, while West Texas Intermediate futures slid $1.06, 64.50 was the close there. Investors also spooked by the two-day decline on Wall Street, which prompted a flight to the safety of U.S. government bonds. Yields on the 10-year Treasury now at 2.72% at the closing bell. The major averages, the Dow down 362 points, the S&P off 31, the Nasdaq lower by 64 points. Other news, Apple shares lower after Bloomberg News reports the Department of Justice and SEC are investigating whether the company violated disclosure laws regarding slowing down older iPhones because of concerns about their lithium batteries. And in a separate report, the Wall Street Journal is reporting Apple is slashing planned production of the iPhone Xs for the next 3 months. Apple is due to report earnings later this week. The stock is down 1.3% so far this year. The volatility index, the VIX, rose to as much as 15.42 during the trading day, its highest level since August. The index was at 1480 at the close. And of course, here in Washington, we are hours away from President Donald Trump's first State of the Union address to Congress. On Wednesday, the Federal Reserve statement on interest rate policy, with Janet Yellen presiding over her last meeting as chairman of the Fed. And of course, later this week on Friday, the all-important jobs report.
Okay, well, the first meeting of the FOMC, or the Fed Open Market Committee, ends later today. This is Janet Yellen's last meet as Fed chair before handing over the powers to Jerome Powell. As always, CNBC's Steve Leisman is here with the expectations.
CNBC Fed survey for January shows that market participants are looking for a bit more from the Federal Reserve this year when it comes to interest rate hikes. 95% of our 40 respondents see no hike coming at the meeting this week, and 90% say the first 25 basis point rate hike will come in March. But they're looking for 3 rate hikes this year, actually 3.21. What does this mean? It means your average person looks for 3, and the second most common answer is actually 4. That's a change from the last survey. Now that we're adding in or starting to think about that 4th rate hike this year. And you can see that in the outlook for rates. The 2018 average, 2.2%, or a full percentage point and then some when it comes to the Fed rate hikes. 2019, 2.8, not much more in 2020, but the long run, 3.2%. That's also higher. So overall, looking for more in the way of interest rates. You can see that also in the 10-year yield, where the current rate is around 2.7, going to 3 at the end of this year and 3.4 at the end of 2019. That's not too bad. If you think about where we were a year ago, that was really the expectation for this year at the beginning of 2017. Higher rates may weigh on the market. 28.54 was close of business yesterday, 29.37. So just really 3 or 4% up from where we are right now by the end of this year, and just 3,005 for the S&P by the end of 2019. But even we get higher rates, we'll also get maybe a little bit more growth. Take a look at the GDP forecast. We've gone up, 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 up in each successive survey, adding about half a point to close this year. The expectation is almost 3%, 2.7% for next year. These are better numbers than we've seen, in part because of the tax cuts. That's really the expectation this year. The tax cuts drive better growth. Steve Leisman, CNBC Business News.
Well, in fact, moving across the Atlantic then, it was a broad-based sell-off that we saw in the European markets. Well, many stocks, they suffered a severe sell-off. A couple of factors playing out there. Falling bond prices, that's telling you the yields are moving higher. And also various concerns were raised that shares have been overvalued now after the strong run that we have seen. And that explains why all the three frontliners, the CAC, the DAX and the FTSE, they ended with cuts of around 0.7% to around 1% odd. In terms of macro data, though, coming out of the Eurozone, that recorded its strongest growth in nearly a decade. So at least that's a bit of a positive. At least the economic data is looking quite good. And maybe, in fact, the markets, they have run a bit ahead of themselves. But if we're taking a look at the peripheral indices, the Italian index, that was under some pressure. The ADX as well was down more than 1% in yesterday's trading session. But the emerging markets, relative outperformers, both those two markets, in fact, ended more or less flattish. The Brazilian and the Russian index up for you on the screen.
Well, back home, weak global cues dragged the last street. The Nifty ended just shy of the 11,050 mark. The Sensex also lost over 250 points to close just above the 36,000 level. Mid-cap index ended with cuts of close to 1% as well. The Bank Nifty also followed suit, ending more than 200 points in the red. So how are we set up for today's trading session, considering that it is one day ahead of the budget as well, and we're working with global cues which are weak again. So not looking good at this point in time, but Naveen is here to tell us more of what we can expect. Naveen, morning.
Exactly. Good morning, Ekta. Exactly what you said. Not many positive cues for today's trading session. As you pointed out, yesterday was a bleak day in trade, with mid-cap and the Bank Nifty both ending with the cuts of close to 1%. And this comes ahead of the big day, that is tomorrow, the union budget. Talking about the institutional flows also, nothing encouraging as such. If you see the cash market FII data, they have sold close to 100 crore rupees. On the other hand, DI has also sold close to 290 crores in the cash market. In fact, FIIs were even sellers in the futures market, sold close to a net of almost 750 crores. The only, I would say, the silver lining was the futures premium, which expanded to almost 22 points versus 7 points in the last trade. So that is one positive cue we would take. But in terms of the global cues, again, for the second day straight, we are seeing negative cuts. So Dow Jones was down close to 1.5%. In fact, DAX and CAC both down close to 1%. Also, the SGX Nifty, that is indicating a downtick of close to around 40-50 points. And if at all we fall below the 11,000 mark, remember, in terms of the support, 11,000 is a strong support for the Nifty. But below that, the next support comes in around the 10,700 levels, given the fact that the put addition is around 7 lakhs at the 10,700 level. So these are the 2 points that you should be keenly watching. If at all we break below the 11,000 mark, 10,700 will be the next support. 10,700 will be the next support for the Nifty. Back to you.
Yeah, all right, Naveen, you have some stocks for us as well this morning?
Of stocks, Nigel. To begin with, a lot of these stocks were buzzing on the back of results. Before that, a lot of these stocks had given notifications to the exchanges post-market yesterday. So Syndicate Bank is one stock. There is a board meet on the 2nd of Feb to revise the capital plan of the bank. On the other hand, QIP for NCC, Nagarjuna Construction, the issue price is approved at around that 123 rupee mark. Welspun Enterprise also has acquired 49% stake for a project for 4-laning at Chakali. So some good news and ordering for Welspun Enterprise. Expect that stock to be positive. Now, a whole host of results. Godrej Consumer came post the market. Good set of numbers, domestic branded volume growth at 18%. That seems to be quite encouraging for the company. On the other hand, Lakshmi Vilas Bank, for the first time, the bank has posted a net loss, and even the asset quality, that seems to be deteriorating. So no good news for Lakshmi Vilas Bank. AU Small Finance also, loan growth seems to be driving the overall earnings for the company. Cholamandalam Investment, the strong disbursement growth and improvement in asset quality, that is expected to drive that stock in today's trade. Oriental Bank of Commerce also, net loss continues to be increasing for the company, and no new improvement in the asset quality. Engineers India, stock that a lot of these oil marketing companies also, along with oil marketing companies, basically orders are given to Engineers India. So that seems to be improving, given the fact that the margins have improved by close to 300 basis points, around the 28% level. Pesalao, that is one stock which will be in focus today, given the fact that the earnings seems to be weak for that company. Ashoka Buildcon also good set of numbers. Margins have improved by close to 100 basis points at around 12%. Back to you.
Well, it's going to be an earnings-heavy day, so let's start off with the big one. ICICI Bank, that's the one that has the potential to move the markets. Abhishek joins us early this morning to tell us what to expect there. Hi, Abhishek. Good morning.
Good morning, Nigel. So the key expectation going into ICICI Bank's results will be the divergence. Now remember that last quarter the RBI surveillance was still on, and unlike Axis Bank and Yes Bank, ICICI Bank didn't report a divergence. So the focus will be on divergence. Slippages which were at around 4,600 odd levels, below 4,500 will be positive, while analysts on street like IDFC Securities estimate a slippage of 5,300 crore. The drill down list or the watch list at 19,600 crore, that forms about 4.1% of the book. How that behaves will be seen closely. Movement in stressed assets with respect to SGR, S4A and 5/25 needs to be seen closely. Now loan growth, which has started moving up, was at 6.3% in the previous quarter. Anything between 8 to 10% is expected in this quarter. Our polls suggest an NII growth of close to 10%, that is 9.9%, while profit to be down by almost 25.5%, and this is the lowest profit level that analysts are expecting in the last 7 quarters. Back to you.
Okay, all right, Abhishek, thanks very much for that. So that really will be one of the big stocks to watch out for in today's trading session, ICICI Bank. But from the metals pack, we have JSW Steel and Vedanta, which will be reporting their third quarter numbers as well. Nigel, what is the expectation?
Well, let's start off with Vedanta, since it's a nifty stock over there. Well, Vedanta is the perfect way to play the entire big metals rally as well as the crude price spike that we have seen. Now, in terms of a top line, we're seeing growth of around 15%. The margin should be stable at around 28%, profit growth at around 28%. Just to tell our viewers, Hindustan Zinc's numbers are already in, so 50% of the EBITDA we already know. Just keep that in mind, because Vedanta owns more than 65% stake in Hindustan Zinc. Base metal prices, that's the big driver. They have ballooned up between 15 to around 25% on a year-on-year basis, so that drives the performance. Aluminium business, that's from where bulk of the profitability now comes. The Jharsuguda 1 smelter, that had a bit of a problem in the first half of the year. Now that's come on stream. And Jharsuguda 2, that's the biggest smelter, that's been ramping up as well, and that should help in terms of a top line growth. What spoils the party a bit for aluminium is that in fact alumina prices have moved up, coal costs as well have been moving higher, so keep an eye out on that front. Copper, that will not do so great in this in the past quarter. Why? Because TCRC margins, that's treatment and refining charges, those margins have been under some pressure, and also volumes have taken a bit of a hit. So in terms of EBITDA, we're working, Motilal Oswal has come out with a number of around 330 crores. Power business, that's the other important part of their businesses. Talwandi Sabu, that's the one that in fact, had a bit of a jitter. That's restarted. The PLF levels have been at around 85-90%. It's expected to be out there. And Motilal Oswal's estimate is roughly around 500 crores. Oil and gas as well. Remember, crude prices have spiked up, so that's been pretty good news. In fact, that's going to help the oil and gas business as well do quite well. Shifting focus to JSW Steel, both these two numbers, expect them by around 2 to around 3:30 p.m. today. JSW Steel top line growth of around 23%. Operating profit should come in high by around 25%. Margins should expand a tad bit. And the profit number as well should jump up by around 60%. What's going to be driving these numbers? Top line will be driven by, in fact, higher realizations and volumes. Remember, the production numbers we already have. Sales volume numbers we're working with is 3.97 million tons. The EBITDA, well, that's expected to spike. Why? Because realizations have moved higher. both domestic as well as international prices. But that's going to be hit because iron ore and coking coal costs, they have spiked up. That's what's going to impact the EBITDA per ton. Remember, the average coking coal price has moved to more than $200 for the past quarter. That compares with roughly around $180 the previous quarter. That's on a sequential basis. Even on a year-on-year basis, it should be higher. And I know prices will be higher because NMDC had hiked prices. EBITDA per ton, the number that we are working with, is around 7,900 rupees on a per ton basis. And the other smaller segments as well, Ekta, need to be tracked. The coated segment, for example, that's been giving you 140, 150 crores approximately. So keep an eye on that factor. And the US operations, remember the same quarter, last year, there was a bit of a loss. Now that's turned around and we expect it to look strong going ahead as well.
Okay, well, Larsen & Toubro, like we mentioned, will be reporting its third quarter numbers today. Varinder is here with us to tell us what he is expecting. Varinder, morning.
Well, good morning to both of you. Good set of numbers expected from Larsen. No doubt the stock is trading at near 52-week high as well. So you have to take that into cognizance. Otherwise, revenues are expected to move up by nearly 10%. EBITDA expected to move up by nearly 16.5%. Margins should improve by 80 basis point to 100 basis point. And profit is expected to move by nearly 50%. Now, two things to watch out for in terms of profit. There could be extraordinary in terms of profit because, the jump of 50% only comes because in the base quarter, there was 270 crores provision which was taken and hence, the base effect is small. And in this quarter, particularly everyone is watching out for that whether there could be any losses due to Hyderabad metro that might be booked in this quarter or not. So that is another thing to watch out for. So if there is anything contrary in terms of the poll, it could be because of the Hyderabad metro project. Otherwise, all the divisions are firing up. The ENC division, the main core business of the company, is expected to do very well. You will be seeing the order inflow is something which everyone watches very, very closely. Remember, in quarter 2, there was an order inflow of nearly 28,500 crores. This quarter, which is quarter 3, there is already an order inflow of nearly 35,000 crores. So it is going as much. The revenue guidance given by the company for FY18 is 12%, which they said they will be meeting up. No one is too much bothered about the 12 to 14% order inflow guidance, which they might, stick or not. That's okay. But I think the revenue growth and the EBITDA margin are the two key numbers to watch out for. Don't focus on PAT. So, for me, 10% growth in terms of revenue and margins at 10.2%. Keep these two things as equilibrium for you. All
right, Varinder, thanks so much for joining in and running us through what to expect out there. But shifting focus to the auto space, Escorts will be on our radar on the back of its third quarter earnings. Sonia joins in. Hi, Sonia. Good morning.
Good morning. It's expected to be a good set of numbers for Escorts. Remember, the stock is sitting at a record high. It's had a dream run. In fact, it's doubled in the last 12 months. And this time around, the volume growth for the tractor segment has been pretty healthy. That'll lead to a double-digit growth on the top line. So we have some estimates from Motilal Oswal where they expect about a 15% top-line growth. The revenue to come in at about 1,250 odd crores. The margins are also expected to improve to almost double digits. 9.9% is what the street is expecting versus 8.4% same time around. Now, the agri-machinery segment from which they get 80% of their revenues, over there the volume growth has been pretty good this time. Domestic volumes have gone up by 11%, coming in at 18,418 units. They've introduced over the last 2 years more than 20 new tractors. They've introduced the new power track range, a couple of loaders as well, and all of that put together has aided their product mix. They've increased their distribution network too. All of that will aid in more profitability. Not just that, the other two businesses, construction and railways, have seen an improvement as well. The construction business was loss-making for a very long time. Last quarter, they reported EBIT profits and the revenues went up. So this time, we're expecting better numbers too. The railway business has got some fresh orders. In fact, due to new order wins, last quarter, the railway business had a good jump in revenues. So I'm expecting that to pick up as well. All in all, good set of numbers. However, the stock is not cheap by any means. It's trading at more than 25 times FY19, much higher than its historic average.
Okay, all right, Sonia, thanks so much for that. But FMCG major Dabur as well will be in focus on the back of its third quarter numbers. The price cuts post GST are expected to aid volumes. Mangalam joins in to take us through the key expectations. Hey Mangalam, morning.
Good morning, Nigel. You know, it's a very important quarter for Dabur. Why? Because one, it's got all things going for it. It's got favorable base both quarter on quarter and year on year. And secondly, last quarter the company showed some flashes of improvement in their two most important businesses. The first one was their oral care business, which grew by about 23%, and the second one was their foods juice business as well. So with all these things going in for the company, the stock moved from 330 last quarter to about 316 now. A lot is expected, and also it will validate the theory that maybe there is some improvement, especially post Imami's numbers yesterday. So Dabur, 11% revenue growth expected on the top line. EBITDA is likely to grow much faster at a 20% growth. We're working with a number of 400 crore rupees out there. Margins, they are likely to improve by about 150 basis points. And finally, we're looking at a net profit growth of close to about 17.5%. For Dabur, the most important thing will be to watch the domestic volumes. The management had alluded to us that they expect double-digit volumes in the second half of this year, and that is what we're expecting. We're expecting anywhere between 12 to 15%. Some optimistic brokerages also pegging 18% in terms of volume growth. And that will be aided by, of course, all the measures that the company is taking, the new product launches, and most importantly, a favorable base. They had cut their prices post GST to about 15% of their portfolio. So that would further add a kicker to the volumes. The two most important things to watch out for, apart from the numbers that I spoke about, watch out for what they did in the international business. Accounts for 30% of their revenues, showed some signs of recovery last quarter. Let's see if that continues or not. And again, finally, the oral segment as well as the foods business, whether that improvement sustains or not.
Okay, all right, Mangalam. Thanks very much for that. Well, a day after the release of the economic survey, Shireen Ban caught up with the author of the survey, the Chief Economic Advisor, Arvind Subramaniam. The CEA explained his views on several issues that he addressed in the survey. Here's an excerpt of what he had to say regarding fiscal consolidation.
If you read the fiscal slippage that I said was for this year, for 17-18, right? And there, remember that the Secretary has said clearly and publicly what the market borrowing for this year is going to be. And, you know, markets have taken that into account. And that's going to be the fiscal outcome for this year. That may involve a bit of slippage, may not, we'll have to see. But that's for this year. For next year, what I've said, three things, very clear. One, the fact that it's an election year does not mean fiscal populism, and I think everyone is on board. No fiscal populism. Second point made very clearly is that if you look at the pure economic cycle now, you would, in principle, and I would argue for an ambitious fiscal consolidation on economic grounds, because inflation is higher, output is higher, output gaps are closing, there's more volatility and external uncertainty, therefore consolidation. But between saying that you should not have populism and saying you must completely ignore political reality, I think there's a middle ground saying, yes, we must have fiscal consolidation, but it may have to some extent take account of where we are in the calendar. And what that means is that, yes, consolidation, but how much is the question?
Okay, so if you're saying that we need to root ourselves in political reality, we are in an election year, but that doesn't necessarily mean fiscal populism, then what does it mean exactly?
It means, see, remember, I have always argued even on the FRBM committee, that steady, this government believes in fiscal consolidation for its own sake, not because of ratings agencies and so on. And what India's fiscal policy, I think, demands is steady reductions in both the debt and the deficit. So that would be what I think government should aim for.
3% is what the target is for next year, for FY19.
According to whom?
Well, that is according to the budget last year. So for FY19, it's 3%. Do you believe that we are going to be able to stick with that, or do you believe that 3.2, which is what the markets are factoring in at this point in time, would be the modest, credible fiscal consolidation plan that you're talking about?
I think, first of all, you'll find out in a couple of days. And also depends upon where we're starting now. So let's see how we turn out. The suspense will have to hold for the next 36 hours.
Okay, so that is Arvind Subramaniam, but those are the live visuals of what's happening in the US right now. That is Donald Trump, and you did see glimpses of his wife Melania Trump as well. It is going to be his first State of the Union address, so that is something that I think the markets will be looking forward to quite keenly, considering that the US markets have been down and out, and there has been a lot of concern with regards to the hardening bond yields, plus what's happening with the dollar and the decline that we're seeing, though he did mention a couple of days ago, which was completely opposite to what some officials in the government had said about the dollar probably seeing some amount of strength. So we're probably going to see that start soon enough, and those are those visuals which are coming in. And yep, he is going to take the stage anytime soon. Let's see what he has to say, especially when it comes to trade, when it comes to tax laws, plus when it comes to the overall state of the economy for the US. I think it's time to cut across.
Members of Congress, I have the high privilege and the distinct honor of presenting to you the President of the United States.
Mr. Speaker, Mr. Vice President, members of Congress, the First Lady of the United States, and my fellow Americans. Less than 1 year has passed since I first stood at this podium in this majestic chamber to speak on behalf of the American people and to address their concerns, their hopes, and their dreams. That night, our new administration had already taken very swift action. A new tide of optimism was already sweeping across our land. Each day since, we have gone forward with a clear vision and a righteous mission to make America great again for all Americans. Over the last year, we have made incredible progress and achieved extraordinary success. We have faced challenges we expected and others we could never have imagined. We have shared in the heights of victory and the pains of hardship. We have endured floods and fires, and storms. But through it all, we have seen the beauty of America's soul and the steel in America's spine. Each test has forged new American heroes to remind us who we are and show us what we can be. We saw the volunteers of the Cajun Navy racing to the rescue with their fishing boats to save people in the aftermath of a totally devastating hurricane. We saw strangers shielding strangers from a hail of gunfire on the Las Vegas Strip. We heard tales of Americans like Coast Guard Petty Officer Ashley Leopard, who is here tonight in the gallery with Melania. Ashley was aboard one of the first helicopters on the scene in Houston during the Hurricane Harvey. Through 18 hours of wind and rain, Ashley braved live power lines and deep water to help save more than 40 lives. Ashley, we all thank you. Thank you very much. We heard about Americans like firefighter David Dahlberg. He's here with us also. David faced down walls of flame to rescue almost 60 children trapped at a California summer camp threatened by those devastating wildfires. To everyone still recovering in Texas, Florida, Louisiana, Puerto Rico, and the Virgin Islands, everywhere, we are with you. We love you, and we always will pull through together, always. Thank you to David and the brave people of California. Thank you very much, David. Great job. Some trials over the past year touched this chamber very personally. With us tonight is one of the toughest people ever to serve in this House. A guy who took a bullet, almost died, and was back to work 3.5 months later. The legend from Louisiana, Congressman Steve Scalise.